Hi everyone, hope you're having a great day wherever you are. Now today we have a very interesting and very important announcement, right? That is in the news, and it seems like a very quiet news, but it is super significant, right? Let's just dive into it very quickly. So we have Fidelity, right? Who, as you can see the numbers, they are huge firm. They are over 70 years old in US, right? Large with 7.4 trillion in total customer assets, 28 million individual investors, and if you talk about institutional investors, they have tens of thousands. Yeah. Now, what is happening? They already have announced that they are going to offer crypto custody as early as October last year, and also we have in the news, quite a lot of major news that's saying that they are going to go live sometime this quarter. But finally, they are up and running. And this is in a very quiet news that it released it yesterday, which is Friday, end of the week, right? And it says here, it actually quietly went live this quarter. And this is the news in CNBC. I put a link here. You can definitely take a look, right? But I just want to quickly highlight a few big points. One is that they said, they did a survey before they actually fully launched it. 22% of the clients already own cryptocurrency. But what is more important is that those clients, 22% of them, plan to double their crypto holdings over the next 5 years. Now that ought to tell you, really now this is really serious, right? It is coming from Fidelity, very credible and big Wall Street names, that their clients are actually investing huge money into crypto, but not to say immediately, but they already have done, and they will do even more in the next 5 years, and that is the key. So let me just quickly read through some of the key points, right? One is that what is the main reason that the institutional investors are interested? Jay Sup, who is the CEO of Fidelity Digital Asset Services, said that there's a long-term interest from institutional investors to add some form of cryptocurrency to their portfolios. It is often seen as an uncorrelated risk or a store of value in a crisis. Yeah. So two big points is that they see that it is uncorrelated, meaning if in the case of stock market or bond market collapse, and in the world where a lot of people are predicting a big crisis coming soon, then it is a very great diversifying tool for their investments, right? And others see it as a trading opportunity given the sector's volatility. And they say specifically Fidelity commissioned research to gauge the level of that interest. They have interviewed roughly 450 institutions, and this is just institutionals, right? Huge entities with huge money, everyone from wealthy families to hedge funds, pensions, and endowments. And the next point is very key. About 22% of the respondents already own cryptocurrency, and those that already own it expect to double their allocation over 5 years, and that is super key. Now, if anything, they are as encouraged now as they were when prices were higher. Now, so this is a proof now, right, from Fidelity officially telling you, and this is published in a very credible news, CNBC, that their clients, 1/5 of them already have cryptocurrencies, but this could be bought already some time ago, or most likely during the last year's winter. And the more important point is that what is the outlook? That they will double their holdings over the next 5 years. Now, this is super key, right? Now, let's just go on a bit more detail. So while the company's live, certain aspects are still work in progress. Fidelity is expanding the jurisdictional coverage of where it can do business, and its offerings are not one size fits all. So some customers were using the platform in January, while for other customers it was March, and others may wait until September. So maybe that's why they are not making a very noisy or very big huge announcements across every media, but only select interviews, right, like this. And he went on to say that many institutional investors are still in a wait-and-see mode when it comes to putting money into crypto. So that's the 78%, right? At some point, there will be an attractive entry point, but by the same token, people don't want to be early, even if we are well off the highs. much of that hesitation has to do with volatility. The digital currency market has been known to jump or sink by 10% in a single day. While prices in 2019 have been relatively stable, institutions are still wary of those sudden price moves. According to the survey, that issue should be solved as the market structure matures. Now, so this is one very, very important news, right? And I want to just highlight another big point. So why they are stopping the 78% from jumping to crypto now, despite the low prices, is that they say education is another roadblock to greater acceptance. The more educated a firm was on the topic, the more likely they were to be holding cryptocurrency. They have approached us wanting to learn, which is an encouraging sign. That's not to say that there is a cohort of people that once they get educated will still have a negative view. So next, right? Apart from that, in my research, I also found an earlier article earlier this year by imbalance.com, the link again in the screen, that says there was a survey done by Bitwise Asset Management, a survey of 150 advisors, right, in the US, and it shows that even with the precipitous drop in crypto prices last year, 22% of financial advisors plan to start a new allocation to crypto in client accounts or increase an existing allocation this year meaning 2019. They also found that 55% of advisors expect Bitcoin's price to increase over the next 5 years, and that is very key. Their mean price target for the year end of 2023 is 17,000. That means close to the last peak of 20,000, so it's about 18,000. And noteworthy, 1/3 of respondents said that they believe some or all of their clients are investing in cryptocurrencies outside of the advisory relationship. Now, so one, you have Fidelity news, right, that they have gone live already. And why? Because they have very strong interest from their clients. 22% of their clients already invested in crypto, and this is institutional clients, yeah, very important to note, including pensions and endowment funds. And not only that, the other key point is that these 22% plan to double their crypto investment over the next 5 years, right? That is so key. And the other 80%, they are just waiting to go in because they are just waiting for the prices to become even more stable, and they just need more education, which a lot of now institutional research firms are coming on board to help with this. And of course, Fidelity also will definitely educate their clients, right? And second, you also have a survey, right, on the financial advisors. That means more companies, in addition to Fidelity, saying that they want to, add crypto in their client accounts. That means they will advise their clients to invest in crypto this year, 2019. And a lot of them, almost 60% of them, are bullish that the prices to increase over the next 5 years, right? May not be as high as some of the bullish estimates like Team Draper 250,000, but still is, go to the peak. And now we are only at close to like 4,000 level of Bitcoin, right, per Bitcoin. That's easily 5 times increase over the next 5 years. Now, which other asset class will give you that kind of attractive returns? Yeah, and that is super key. Now, not only that, it is very interesting, and this is just yesterday's news, that Tim Draper, in a very recent interview with NBC Bay podcast, Sand Hill Road, he again reiterated that, right, if you go to Starbucks to buy a coffee in the next 4 or 5 years, and you try to pay with dollars, they will laugh at you because you are not using Bitcoin, right? And they will laugh at you. It will be like the old lady paying out with pennies, yeah? And he said that, and when asked how would it be feasible to use a coin worth 250,000 to buy a cup of coffee, the unapologetic Bitcoin bull said that it would be only a temporary problem. He said, that's a temporary problem. There's a market for Bitcoin right now. People are buying and selling Bitcoin, and they are buying and selling things and services with Bitcoin. As it spreads, it will go up in value, and it is spreading. Now, so on this Tim Draper point, right, this is not the first time he predicted that Bitcoin will go up to 250,000 in 2022 or 2023, right, 4 or 5 years time. And this is also not the first time he said that, right, you can definitely buy a coffee at Starbucks with Bitcoin by then. And also, this is not the first time as well that he said that people will laugh at you if you don't use Bitcoin and if you still use your fiat currency by then. And I must tell you something, right? There is a very wide belief among the people, right, who understand the theory that there is a group of elites, very, very rich people who keep a super low profile, right, that thinks that, right, the elites know something that a lot of us don't, right, and they have an obligation to tell people, but they are not, they will just try their best to tell you. And if you don't hear it, then it's your problem, yeah. But if you hear it and if you truly take action and fully understand, then you will benefit. But if not, right, then it's not their problem, because these elites believe that when they know something, then it's their obligation to at least tell it in some form, right? And if they don't, it will be bad karma on them. Then, they will die a bad death, or they will go to hell, that kind of beliefs, right? So I believe, right, I mean, again, this is my personal opinion, right? Not financial advice. So Tim Draper didn't say go and buy Bitcoin now. He only said that, right, it will go up to 250,000, his prediction, and he was correct in calling $10,000 a Bitcoin in 2017. In fact, he was, his predictions was more than exceeded, right? But he was very famous because he was correct in those predictions, and now he's calling for Bitcoin to reach 250,000, and he is saying that people will laugh at you if you still use fiat in 2022 to buy coffee. So he didn't exactly say that you need to buy now, but he already tell you, right, that Bitcoin or cryptocurrency will be the reserve currency, or will be a daily fiat or daily currency by then. So, he just didn't tell you what you need to do, which is to buy Bitcoin, right? That's like obvious. But if people who don't understand, they don't make the connection, they just don't see it. So I believe, right, this is really part of those elite at work, where they know something and they have an obligation to tell you. And similarly with Fidelity as well. They already told you in CNBC, but this is in one of the bottom paragraphs of that long article, right? And if people don't read everything, it is not in a big point, right? For me, it is definitely should be involved in the key points, right? As you can see, back to the first screen here, if you can have a chance to look at this first screen, this is their choice of key points that they chose to put in at the top of the article. But actually, the key point is that 22% of Fidelity institutional clients already have crypto, and they plan to double those investment over the next 5 years. And that is super, super key, right? That it is no longer anyone's opinion. It is a fact now that institutional clients already in the crypto, and they are not stopping. They are continue to increase their holdings over the next 5 years. And the rest of them who are not yet in, they just need education, and they're just waiting for the price maybe to drop further or to become more stable before they go in. Yeah. And it's just a matter of time. And also on the supply front, the financial advisors already said that they are going to increase their crypto allocation to their clients. That means they are going to recommend crypto to their clients. All this, right? And Tim Draper reiterating so many times recently that you can buy, people will laugh at you if you don't use Bitcoin in 4 years time. So all this ought to tell you that crypto is here to stay. Not only that, a lot of huge money are going to go into this space, whether you like it or not. It is no longer an opinion, and it is no longer my personal opinion. It is already a fact, right? But the fact that it is still not in so super mainstream, and it is hidden in some bottom paragraph of a CNBC article, is just sad, right? But they already told you, and the writing are already on the wall. And if you don't see it, it is really, really your issue, yeah? And if 4 or 5 years time, and if you still don't have the crypto, then, don't let anyone say the word like, I told you so to you, yeah? And that's all I have, right? I really want to get this message out there, and I hope you really get what I mean. And if you do, please pass this on to as many people as you can. And I hope you like this. Please leave a like, please subscribe, and I see you in the next episode. Thank you so much for watching, and thank you so much for all your support, right? And hope you're having a great day.